Alright, I'd like to welcome you to Mega Profit Online Trading Channel. I'd like to continue from where we stopped in support and resistance. But now I want to look at trend lines. What are trend lines? Trend lines helps you to know where to, it assists you in your support and resistance. It's a guide to support and resistance. So it is always good to trade using your support and resistance in accordance with the trend lines. The trend line tells you when market is about to shoot out of your support or your resistance. So we said that trend lines are probably the most common form of technical analysis in trading. They are probably one of the most underutilized ones as well. If drawn correctly, okay, they can be useful as any other method. This is how a trend line looks like. A trend line touches what? The first edge, possibly second or third. So two edges or more. This is an uptrend when price is going up. This is a downtrend when price is going down. So now, an outline point for a trend line. A trend line is a straight line that connects two or more price points or edges on a chart, acting as a visual guide to indicate the direction of the currency pair trend, or you say cryptocurrency trend. Okay, now traders use these lines to identify the general direction in which a currency pair is moving. I'm using currency pair as an example here. Whether it is upward, that is bullish trend, downward, which is bearish trend, then or sideways, which is a trading range or consolidation market. So now let's look at phases of the market. We have three phases of the market, which also I call them types of trend. Okay, now I've shown you, if you want to identify trend, which is the first thing you do before trading, you go to my top-down analysis video, how it tells you and shows you how you can identify a trend before you start marking your key support and resistance. Alright, after marking your key support and resistance, the next thing you do is you draw your trend line. Your trend line will help you to know when market is about trading outside your levels. Okay, so we have an uptrend when price is going up. We have a downtrend when price is going down. We have a sideways trend, that is when market is trading on a range. This is a typical example of that. This is an uptrend when price is going up, a downtrend when price is going down. Then this is a trading range. Okay, so this is how you draw it. Make sure that you get the first point, okay, the first edge, possibly get the second one. Anyone can shoot out, but make sure you get up to two or more points, okay, or edges. Look at this one. It mustn't be perfect, okay, but at this point now you see price tends to break out of the trend line. Look at this too. Okay, so this is for downtrend, this is for uptrend. Now, how you can effectively draw the trend line? Identify the trend first. Okay, you need to identify using your top-down analysis. You identify your trend, then you mark your key support levels and resistance. Then you start by determining if the market is an uptrend or downtrend or sideways trend. Now connect this significant point. For an uptrend, connect two or more lows, okay, or a downtrend, connect two or more highs. That is when price is going up. Ensure that line touches as many points as possible without cutting through the price action. Extend the line. Once the line is established, extend it into the future to gauge where the potential support or resistance levels may appear. Adjust for accuracy. How do you adjust for accuracy? Sometimes a trend line may need to be adjusted as more data becomes available. So let's dive into how we can do this. Okay, let's dive into how we can do this now. All right, this is a chart. This is volatility 25 index. Okay, I don't trade volatility, but I want to use the raw chart to explain here how you can draw your trend lines. So after you've made your top-down analysis and do your key levels and support and resistance, you will identify the next thing is what? To draw your trend lines. So here now, when I look at this market, I just know that this market is on what? A sideways trend. Look at it. Up, down, up, down, up, down. So it's a sideways what? Trend. So I just look at it and I don't need to worry about much, but you need to learn so that you understand. So what do I do now? What I need to do is to get the edges. So look at the first edge here. Look at the second one here. The second one here. This is the third one. So what do? I get these edges. Okay. All right. Then I get this other one too. Look at this. This is for what? Horizontal. For horizontal lines. So let me adjust the line a bit. Okay. All right. So this gives me a clue that when market goes to this place, I sell. Okay. When market gets to this boundary, I buy, because it's on a trending what? Range. It goes here, I sell. Then it goes down again, I buy. It goes back to this place, I sell. It goes back to this place where price is currently doing at 2007. So what I'll do is I will place my buy. I can buy at this point. Then when price gets to this level, I still sell. So then another thing you need to do is to learn how to trade what? To trade channels. To trade what? Channels. Okay. So after drawing your trend line, another thing you need to learn how to do is your trend channel. A trend channel is a parallel line to the trend line. So what is a trend channel? A trend channel is a set of parallel trend line defined by the highs and lows of the asset price action. A trend channel also sometimes is called a price channel, which occurs when price is moving between two parallel trend lines. Trend channels can be drawn on the charts to help see uptrend or a downtrend. So you can see this is what? The first line, which is called our trend line, touching what? The edges. It is drawn. Then the opposite of it, which is the parallel line, okay, which also touches the edges of where market reacted, is called the parallel, is called the trend channel. Okay, this is a very good example of it. So you first of all draw your trend line, and the parallel line to that, the trend line, is known as your what? Is known as your trend channel. So this, okay, look at when market broke out of the channel here and it continues up. Then we are trying to look at where price is actually reacting. So it reacts here, it comes here. Now you can have anyone that overshoots. Now look at this one, you overshoot and came back, and this is called what? A false breakout. Then came back, you still sell here. So you sell here, you buy here, you sell here, you buy here, you sell here. Okay, this is another channel too. This is in a micro level. This is a micro level. So I like to take us back now into the raw chart so that you see how you can draw this. Okay, taking you back here now, you can see. Let me show you how you can draw this. So on micro level, you do this. Okay. So at this point, you see, market have exhausted in this downtrend movement. So it goes up and break out of this place. You can also draw this. Okay. That tells you when market moves up, comes down, you buy, moves up and sell. Then it breaks this level here. But in general, the trend here is what? Is in trending range. This is not a major trend, but at the macro level, it is also trending. Okay, it's also trending. Okay, but at the macro level on a major a macro level is on a trending range. So at this level, if I'm to trade this particular one, I'm touching this edge, touching the second one, and I'll come down here. So what market will do is, I've touched here, so I expect price to move down. When price gets to this level, I have to be very careful. Maybe I take my profit. Okay, maybe I'll take my profit. So that is how to draw your trend line. Or if it breaks out of this place, then I continue. I will leave my profit. When it gets to up to this level, I will sell off, and possibly maybe I will place another sell market here from this point. Okay, so that's how to use your trend line. Then the trend channel can also be maintained this way. This is your trend line, your trend channel, the parallel line to that. This is the parallel line to this. This is the parallel line to this too. So this tells you when market is going down, when to buy. So here now, I buy, I sell. I buy at this level, then it didn't get up to this point, so you can still sell. You have to be very careful. At this point, I buy, then I allow market to touch to any of this area. If it gets here and touch here, or possibly get here, likely it will get to this point. Why I said so is because this is another key level of resistance. You know I didn't drop my key level of resistance here. If I have my key level of resistance drawn here, it becomes a very perfect chart that I can trade very easily. Okay, so but what I'm trying to teach here is how you can use to draw your trend line and your trend channel to trade. Okay, so here now you buy, you sell at this edge, then market draws back to this edge, you buy, market touches this edge, you sell. On a micro level, this is a channel. Here you sell, you buy, you sell, you buy. Then if it touches another edge, you also sell. It gets to this point, you also buy. So that is how to use your trend line and your trend channel. Your trend line and your trend channel, it guides you with your support and resistance. It guides you with your support and resistance. So it enables you to make more money out of the market than losing money. Okay. Now I have to be very fast here. The next thing I have to talk about is the psychological levels. Psychological levels. After you have drawn your key support and resistance, and you need to determine the psychological levels. Psychological levels are levels of the support and resistance, but then you have it in a random number, just rounding it up with maybe 00, or rounding it up with a number. Okay, that's what it means, round up number. In technical analysis, psychological levels are price levels that is perceived as significant by traders, often due to its round up number or because it has previously acted as a support and resistance level. So let me give you a good example how you round up. Okay, for example, look at this. Okay, this is a support, a resistance level here that have been turned to support. So what do? You round up this number. Okay, now let's go to a live chart where you will understand this better. Let's get to a live chart. Okay, now for example, let me draw my key levels and support lines here. Let me draw my lines here. Key levels. Assuming this is a resistant line here now. I need to round up this line here. This line here now. Now I round it up with a number. Okay, this is 2. Actually, is at 2,067. So I'll round it up with 0,600. Okay. Now I've rounded up. I've succeeded in rounding it up to what? To 60, 20, 60, 20, 60. So you must round it up with a number that will end with what? 0. It could be 00. It could just be maybe 50. It could be 60. but it has to end with what? 0. So that is called what? Round up number. Psychological levels. It's called psychological what? Levels. So that's how to round up a number. That's how to round up a number. You can also, okay, let me draw another trend line. Okay, let me draw another trend line. This is another trend line here. Okay. Oh, sorry, my key level of support and resistance. So here is another one here. This is another resistance here. Okay, this is another resistance. Now, what do? I need to round up this. I want to round up this resistant line. So what I do is, I look at it, it ends with 2,234. So let me end it up with 2,230. 30 has to end with 0. Okay, so I have done, this is now my round-up number on psychological level of this support, of this key level of resistance. Okay, this key level of resistance. So I have succeeded in rounding up this point. Okay, rounding up also this point. So this is how you draw your psychological lines. So the psychological lines are still the support and resistance line, but then you round them up with what? 0. You round them up with 0. So that's how it works. Thank you so much. Let's see another video. I'm making another video, that will also help you to do this. Thank you so much, and God bless you.